versus G10, you're absolutely right. I think we have done already quite a fair bit. And if you look at, for example, where the euro trades on a trade-weighted basis, I think 8% up there about. That is already a big move. So I'm not expecting here the massive thrust that the dollar or the decline for the DXY. I think the opportunity lies more in the emerging market that we're going to see, okay, the Fed continues to be extremely supportive on one hand side, and we're recognizing that the economy comes back. And then so you see this emerging market catch up, and those are really the laggards that can do more. So we're looking at INR, IDR, particularly here in Asia. I think there's the opportunity for more.
Dominic, I mean, the dollar did have its best week since May, though. And if you go back to September 1st, we've had a decent move to the upside as we've seen more volatility in equity markets. So this gets back to that pull and push, if you will, between what happens on the monetary policy side and then how the dollar is perceived as a safe haven, and what ultimately wins out if we're going to continue to see volatility in the markets.
Well, if you truly see a spike in volatility, the dollar is going to be firm. In the short term, vol spikes dominate, I think, the FX market, but that's not a persistent story. So, yes, you could argue as we go into the U.S. election, there's more uncertainty, and like in the 2000s, where I think Bush against Gore, where the dollar struggled, the equity market struggled. I mean, if you have that kind of scenario, I think the dollar would be supported. I wouldn't expect much of a strength that's staying where it is. But I think when you look beyond that kind of volatility, you still hold the view that the economy broadly recovers finally somewhere outside China as well. Then I think that element, the growth story element, is still the dominant driver. And then I think some of the exceptionalism will continue to be priced out of the greenback. So really that emerging market angle, it's that rotation story that I mentioned to you, which I think is for me quite important. A lot has been done already against the G10, as I mentioned before. And so here it's really the incremental element. Here you might want to look into the pound or Canadian dollar. Some of them who can still do a little bit more. But it's the EM story that has yet to kick in.
When it comes to pound sterling, though, how concerned are you by what appears to be Boris Johnson and the government continuing to play hardball when it comes to these Brexit talks?
Well, it did obviously surprise us. We expected here a little bit more a smoother trajectory. But on the other side, it's fair to say, I mean, we never expected there's going to be some very skinny deal that we're going to have between the EU and the UK. I think what is important for me is that is going to be a stepping stone for more to come. And so I think once we get even a basic deal, then I think that's the condition set for cable go back to 135. So I think the cable is an interesting currency to hold. Okay, we could get a little bit more dovishness now this week, also from the Bank of England. I think that is possible. But the data has been on the more surprising positive side. So I think at the moment, I think if you have the risk budget, I would definitely still be long the pound, maybe more structurally. Or if you have the opportunity to sell volatility, because also vol have gone up due to Boris' unexpected move,